Alright, YouTube, welcome back to my channel, Smart Money Rich. So, guys, today I'll be teaching you guys, always it's all about education. I'm giving you guys educational content, and today is another hot banger for you guys. So, one thing I'll be teaching you guys today is about understanding market trend in a simple and easy way, not as complicated as other people think, because now it all depends on who is teaching you. You understand, guys? If your mentor, your tutor takes these processes easier, you might understand these things and it won't take you as much as you thought to get grasp of them. So today I'll be breaking down market trends in a simple way that even a beginner or an advanced trader will be able to understand. So if you love this content, guys, make sure you stay tuned and then click on the subscribe button. Let's dive on the screen, guys. So let's go. So guys, I have goodies in store for you in this video. So today, guys, I'll be talking about market trend. You understand? We're talking about the uptrend and the downtrend, how to understand when price is in a buy, which is in an uptrend, and when price is in a sell, which is in a downtrend. How to identify these two different trends and how to trade in line with it. Now, a lot of people make it look as if it is difficult to understand and trade in line with the market trend. But this will be your last video that you ever watch and look for a market trend video. This video is for both newbies and advanced traders. Even if you've been trading Forex for a very long time, you still need to watch this video because it's packed full information about the market trend. All right, guys. Now, trend is a market condition for prices to move in a particular direction over a period of time. So price could either be in an uptrend, price could either be in a downtrend. But remember, guys, when price is in an uptrend, it doesn't mean the price will continue in that uptrend forever. When price is also in a downtrend, it doesn't mean that price will continue in that downtrend forever. Now, if you look on the higher time frame, you're going to see a different trend from what you're seeing on the lower time frame. So I get this question a lot from students. Say when I get to the 4 hour, 2 hour, 1 hour, I'm seeing an uptrend. When I go to the 15 minute, 5 minute, 1 minute, I'm seeing a downtrend. How should I be trading such trend? Today I'll be explaining to you guys how to trade such trend, right? So now, guys, when we talk about trends, trends can be long-term, intermediate, or short-term trend, right? So now, success in Forex can be tied to the ability to identify trends and take position in line with it. When we talk about the market trends, it means a lot for any Forex trader to know how to follow the trend accordingly, to know when the pullback is about to end, or either know where the pullback will end. If you know how to identify a trend and know when the pullback will end, you can catch a sniper entry once the pullback ends and ride the trade in continuation with the current market trend. You understand? So now, there's always a popular saying by traders, the trend is your friend, right? And I put this right up on the screen so you can always take notes of what I'm teaching. You can read them later on, or you can just take a picture of it if you can't write. Yeah, but this video is here for you. You can always come back to watch it, right? You can always come back to watch this video. Okay, so now there's always popular saying. It's not more like a popular saying, but this is more like a warning that is being sound to you, that have been sent to you. Always follow the trend. Make the trend your friend. This is one thing I look out for every day. Is I ask myself, what's the current trend of the market on the higher time frame? What's the daily trend? What's the weekly trend? What's the 4 hour trend? What's the 1 hour trend? Because I want to trade in line with it. You don't want to trade against the market trend, else you'll be consumed. And you guys know when you're consumed, you know what happens to you, right? You hit stop loss, or your account is blown, or you lose more than you wanted to. So we want to always follow the trend. How can I identify or spot trend? I'll go on the chart and show you guys real quick, but let's finish with what we have on the right top. So now, if you are able to spot this trend, how can you spot it? Trend can be spotted using price action, or by plotting trend line, or by visual observation. So this is what we say by visual observation. Some people can look at the charts without nothing and know. Why? By some people will need to use their trend line for them to be able to identify if price is in an uptrend or price is still continuing in an uptrend or in a downtrend. And also price action too. A lot of people use price action to look at the market trend. Now, the market can move in three different directions, right? It can be an uptrend, which consists of higher highs and higher lows, right? And it can also move in a downtrend, which consists of what? Lower highs and what? Lower lows. Then the price can also range, guys. When I talk about range, the price can give you like an equal highs and then equal lows. We call this consolidation, or you say price is ranging. Right? Now, if price is ranging, you simply stay out of the market. Yeah, we simply stay away from the market until price gives us the direction that it wants to move. So you can say price is either consolidating or price is ranging. So simply what price is doing is price is building liquidities above the highs and the lows, which means there is an equal power between the buyers and the sellers. Now it needs to take more power for price to then move to any other direction. Sellers can take over from anywhere, buyers can take over from anywhere. That's why it is very risky to trade a ranging market. Well, I'll teach you guys how to trade it before the end of this video. All right, so let's sweep over right here and see examples of an uptrend and a downtrend on the chart. So you can see an example of what we have right here on the chart, guys. You can see that this one in green is an uptrend, right? And this one in red is an example of a downtrend. Now, when we talk about an uptrend and a downtrend, now in an uptrend, the price will print a low, which is going to be this low right here. The price will print a low. Once the price prints a low, it will then do what? Continue to give us a high. Once the high has been completed, you'll start to see price giving us that pull back, right? Price will start to pull back. Now, when price is doing a pullback, we don't know if price will break the lows or if price will continue to the upside to break the highs. So at this moment, we can't tell if price will break the high or the low until you will see price take such action, right? So what we can say in an uptrend now is the price is now pull up and then it ended up what? Breaking above that high, which means this low is totally what? Safe down here. So price from here was not able to break below this low, right? So automatically this low becomes what? The strong low, right? This is not about market structure. This is about market trend. But there are a lot of informations that I'm going to give you guys in this video, right? In this video. So now, what you see now is what? Price then continues to give us a new low and then a new high. This low is the first low, so we call it the low alone. Why this becomes the high? But if price comes and prints a new low, it becomes a higher low because it is higher than the previous low. And the new high becomes a higher high because it is higher than the previous high. You understand? Now, it starts to look like a staircase. When you're pulling on your staircase, you're going upstairs or you're coming downstairs, you know the difference, right? So price starts to give you that new highs and new lows. So it gives you a new higher high, which is higher than the previous high, and a new higher low, which is higher than the previous low, right? This becomes a new high because it is higher than the previous high. Now, some people can simply look on their charts and identify what price is doing and know where price will definitely pull back to for them to continue the trend. You understand? Why some people also need to use their trend line. Just as you can see here, I had to use this trend line for people to see that up move direction. that up move direction, everybody can see that the price is creating a new low, but each of this new low is higher than the previous low. While to the upside, price is creating a new high, and each of this new high is higher than the previous high. That's why they become the higher high, the H, and this becomes the higher low, the HL. You understand, guys? So let's pull over to the downtrend. So this be an example of a downtrend. When price is switching to the downside, guys, you see price gives us a high, and then we have a low. We are going to get those pullback. Price will need to pull back up, right, to give us a new lower high, right? This is called a lower high because it is lower than the previous low. And then you're going to see that push to the downside that ends up taking out the previous low, giving us or creating a new lower low. So this new low becomes a lower low because it's actually absolutely lower than the previous low. Do you understand, guys? It looks like a staircase, like I said. Price will continue to give you a new low, which will always be lower than the previous low, and then also price will continue to give you a new lower high, which is always going to be lower than the previous high. You understand? So this be an example of a downtrend. Now, when you're seeing market trends on the higher time frame like this, it tells a lot about where the investors, the market makers, the smart monies are pushing price. That's why you always want to stick with the overall market trend because this tells where the institutions, the big banks, the market makers are pulling price. So if you have identified a series of higher highs and higher lows, it might be three higher highs or three higher lows for you to at least believe that price is continuing in an uptrend. And also price can at least give you a series of three lower highs and three lower lows for you to confirm that price is now in a downtrend. Right now, you need to look at market trend on the higher time frame, right? You want to see this thing on the higher time frame because you want to work with the overall higher time frame trend. So you need to look at either the monthly, the daily, the weekly to look at the trend. Where is the market trending to? Who has been in control of the market all this while? Who are the overall market movers this week? Is it the bears? Is it the bulls, right? So now, in an uptrend, we can say price is bullish. Don't forget, guys. While in a downtrend, we can also say the market is what? Bearish. So you hear a lot of traders are going to talk about the market is bullish, the market is bearish. So you need to understand that a downtrend is known as a bear trend or bearish, and an uptrend is known as bullish. You understand? Or bull trends, right? So all these things are simple things you need to understand. You also need to know, I'm going to teach you guys about market structure. This one is all about market trends, okay? So this is it. You always want to mark out your swing points in the market. Okay, you always want to mark out your swing points in the market. Your swing points are going to be those levels, those areas where price gets to and then pull back to create a new low, right? Then your new swing high is going to be the new high that price got to and then gave you that pullback that gave you the new what? Higher low. So this becomes your what? Your swing point. Now, when you're looking at the market trend, always make sure that you're not being confused. You stay focused. You look at what price is doing. Okay. So let me show you guys examples of these things on a chart, on a live chart, right? Let me show you guys an example of this thing on a live chart. So if you look at the chart currently, what we have here, I'm going to do a replay, guys. I'm going to do a replay. This is going to be an example of an uptrend, right? So looking at price clearly right now, what will you see, guys? What you're going to see is that we have this high, and then we have this low. We have a new high, then we have a new low, which is higher than the previous low, gives us a new high, which is higher than the previous high, and then a new low, which is higher than the previous low, and then price just does what? Continue to the upside like that. So when you see things like this, price is in an uptrend because price continues to print a new high. It's a higher than the previous high, and then give a new low that always higher than the previous lows. So guys, I'll also show you guys like a quick example of a downtrend as well. So let's quickly look and try to identify a downtrend here. So this is going to be the example of our downtrend, guys. So looking at it right here, let me leave it this way. Let me leave it this way. All right. Let me leave it this way. So what you can see, guys, is you see we have this high. Price was in an uptrend though, and it get here, it decided to pull back, right? This high here becomes your swing high. That's the high. This low here becomes your swing low. This is the low. We have a pullback and a continuation that breaks the previous low. This becomes your what? Lower high because it is lower than the previous high. Okay, and then we print a new high lower than the previous one, a new low. We then do what? Price then continues to move in a downward trend until we decided to shift to the upside. So you can clearly see price doing what? Shifting to the upside. So this is how you want to identify market trends on your chart. There are many more to this. You need to always study your charts, stay close to your chart, look at the turning points of price, where price gets to, and then turn to the other side. You want to make sure that you master price action very well. And by doing this, you can find your way through in the financial market. Now, let's talk about the pullbacks. Why do we have the pullbacks when price? Why don't price just shoot to the upside? Right? The market, the chart itself, the candlesticks, they are showing you a data, an information of what sellers and buyers are doing. And now, as a human, you need to understand that emotions are involved when it comes to trading. Okay, there are some levels price will get to, and then those who bought earlier will start to take profit, which means if they buy at 1,000, let's say they bought gold around 1991, once price gets to 2050, they've made good amount of profit. You know that they've made good amount of profit. You understand? They need to do what? Take profit. And then we have those who we call the FOMO traders, those who FOMO, fear of missing out. They will be jumping in for sales. And the other guys will be doing what we call profit taking. So those profit taking and those guys who are selling, thinking they're selling at the high, and for the fact that price has done what? Has broken structure this high, taking out the liquidities that were sitting above this high, price will then need to do what? Pull back into a more discounted price level. It's just like when, let's say, price is moving in a certain direction. When price gets weak, which means the sellers now, the buyers, right, now starts to leave the market. Gradually, they are taking their profit. You understand? I entered gold. I bought gold at 1991, and gold is around 2050. That's a good one for me there. That's profit for me there. I need to take my profit and leave the market. Now, I'm taking my money plus extra other people's money. So I'm taking out money from the market. When you remove money from the market becomes weak. So when the market becomes weak, the market is going to need support to push it to continue in that uptrend. It will now switch to downtrend when finally the sellers have been able to overpower the buyers, which means the buyers need to change hands to the sellers. You understand? So price will continue to buy until it becomes weak. But price will always give you a pullback in an uptrend, but it doesn't mean that price is about to sell. You understand, guys? So price will do a pullback so it can come to at least a more discounted price level where it can then do what? Attract buyers to come in again. You understand? So once it attracts these buyers to come into the market again, price will do what? Once the buyers enters the market, price will then continue to push to the upside, which continues that trend until the buyers are weak. So everything that I explain here can also be applied to the downtrend. So what I want you guys to do now, always visit this channel so that you can watch and understand more, right? Now, there are more other YouTube videos that are coming about market structures on the blog. So someone in the last comment section on my last video said I should do a video about market trend, and then this is the video. Now, whatever video you think, whatever educational video you think I should drop next, comment it in the comment section and I will drop that video for you. And if you love contents like this, do well to subscribe to the channel, turn on the notification bell so whenever I drop other videos like this, you'll be notified so that you can learn and then gain more knowledge about the financial market. So guys, subscribe, turn on the notification bell, drop your comment below, and then click on the like button. And guys, I also have a free Telegram community where I send signals daily, right? So if you want to join this free signal community on my Telegram channel, click the link down below. So I'll see you guys in the next video. So whatever video you want me to drop, whatever educational content you want me to drop, do well to drop the comment in the comment section. See you guys in the next video. Thumbs up.